Welcome back, hard forkers. Welcome back, Baloo. It's been a time.
It's been a minute, maybe two. It's been a while.
Yeah, it has. It has. Look, obviously, Bitcoin up 45% this year. We've been dipping our toe back into making content for people that have been following us. Obviously, Baloo's been plugging away vigorously, meticulously for all of the bear market. Congratulations on that. So, look, we are going to be
ebbs and flows, but yeah.
Yeah. So look, what we're going to be doing here, people, probably starting out with a weekly show, which we're going to ramp up significantly moving forward. This show is very much for the traders out there and also a bit of education around value proposition of Bitcoin. It's obviously become a hell of a lot more pertinent these days. So we'll do our best to talk you through how we're playing it. Obviously not financial advice, what exchanges we're using, et cetera, et cetera. So look, let's get into it today with some charts, and then we'll have more of a general chat after that. So over to you, sir.
Sure. Yeah. So I actually want to start things out on more of a fundamental side. Let me see. How do I share my screen, my whole screen here? Desktop too. Okay. Yeah, I'll share on more of a fundamental side. And I just want to talk a little bit about exchange balances. I've heard a few times people refer to there being a lack of liquidity in the market. And this is true, but they're taking it into a context as though that means crypto can't go up in price. And this is what a lot of people don't really understand. So as you can see by this chart here, the balances on exchanges have been in a decline. Basically, they've been in a decline since 2020. Less and less Bitcoin is on exchange since 2020. This is not necessarily a bad thing for price. As we know, we had the 2020 bull market. We had the 2021 bull market. It's not necessarily bad for price. What it's bad for is volatility. Now, volatility goes both ways. You have a decrease in the amount of orders on an exchange order book. This does not mean that it's hard to move price. Increased liquidity does not mean increased price. This is something that I've talked about a few times here on the show. You know, people think, okay, Bitcoin's at $1 trillion. That means $1 trillion went into Bitcoin. No, the number that went into Bitcoin is actually far less. The thing that you need to realize about markets is everything in this world, everything, Bitcoin, houses, oranges, pork bellies, everything in this world is decided by what somebody is willing to pay. If somebody is willing to pay a price, that is the price. And that is the job of the exchanges and the order books. They're there to measure demand in the market based off of the supply that they have. The less supply and the more demand, the more you have a price expanse. So I want to kind of illustrate what I'm seeing on the demand side. This is the supply side. You know, there's not a lot on the exchanges. On the demand side, we're actually seeing an increase in network activity as far as new addresses on the market. So this blue line represents new Bitcoin addresses that are being created to hold Bitcoin. It's not necessarily saying there's Bitcoin in it, or I guess it would be measured with some of Bitcoin. And we can see that this continues to be on an increase. More and more addresses coming online means more and more users coming online. It means more and more use coming online. So the demand hasn't changed. The demand has only gone up. Bull market, bear market, doesn't matter. The usage of the network is steadily increasing. So you need to let the speculators, you know, bid stuff up, and then there's a market correction. And where it corrects to is that intrinsic value. And the intrinsic value is the network usage. And in my opinion, I think we're in the general area where the value matches speculation. If not, maybe the speculation is undervaluing the market. So, and then, you know, for those who don't like the technical side, before we get into the technicals, this is a very simple chart. This comes from Glassnode. All of the charts that I just took a look at are Glassnode. And this is the Bitcoin investor tool. You have two lines. It's a very simple chart. You have the red line, which indicates that the market is probably overpricing the underlying asset, in this case, Bitcoin. And then you have the green line where the market is undervaluing the asset. So right now, as you can see by this line, we're below the green. We're in accumulation zone. You can see that every time we've been below this green line, it's been a good time to buy Bitcoin. I'm not saying that that the bottom's in, and I'm not saying that Bitcoin will never see a lower price than what we're at today. What I'm saying is it's valued under its intrinsic value, in my opinion, based off of me as a user and what I'm seeing with the on-chain.
Yeah. Just to add a point there where you were talking about liquidity, obviously we had a chat about Nicholas Merton's video the other day where he was painting a very bleak picture because of this liquidity crisis. So yeah, look, I absolutely agree with your points there. What I would add is that part of the issue for US traders is that the slippage it has increased by a factor on Coinbase, for example, by 2.5 due to the difficulty of people onboarding, so coming out of fiat, converting to Bitcoin, and then entering a trade. So those on and off ramps have become very difficult in the US. Therefore, specifically US exchanges have experienced some liquidity issues when it comes to slippage. So in other words, you're trying to sell $1 million worth of Bitcoin, that's going to affect the market. And the slippage is greater. So that's really the main issue, right? When we're talking about liquidity at the moment.
Yeah, and it's kind of the same thing. Like slippage refers to the amount of resting orders in an order book.
Yeah.
So if you're trying to sell, you need to take a bunch of offers when you're selling. Like, I'm going to buy at this price. If there's not a lot of liquidity, the price gap from the market price to, let's say you're trying to sell 100 Bitcoin, by the time you go through the order book and get to 100 Bitcoin, you may be buying Bitcoin at a price that's several $1,000s lower.
Yeah.
So that's the slippage that we're talking about here. And that's the volatility, and that's the lack of liquidity. Now it goes both ways. If demand comes in, there's low liquidity on the ask side as well.
Yeah.
So it just goes quickly. It's just increased volatility both ways.
Yeah. Very true. What can you tell us about, you were showing a chart of wallets there. What can you tell us about the large wallets and whether or not we've seen movement out of those? I mean, that's sort of a really important metric. Are the big players selling? Any thoughts on that?
Yeah, let's take a look at some of the whale wallets right now. I just got to pull it up, so we'll edit this bit out.
We're going off the cuff here, people, so I'm going to be springing stuff like this at Baloo today.
All right, let's see here. Addresses. Okay.
I think this is such an important metric at the moment, kind of given the fact that, a lot of retail aren't here right now. So for me, we're looking for
on-chain says otherwise. Let me pull it over.
There we go. So this is
all right.
Addresses is greater than 10.
Yes. So we're going to start off in the middle here. Addresses that hold more than 10 Bitcoin.
Yeah.
Now, we'll get into my thoughts on this in a moment, my permabull thoughts on how maybe this metric might not be as good as it used to be. But anyways, here, addresses that have more than 10 Bitcoin, those are on the rise. So we do have an increase in addresses that hold more than 10 Bitcoin. Once we get down to 100, it's pretty flat. So we're actually seeing an offload with wallets that have more than 1,000. Now, for me, I would consider myself an advanced user on Bitcoin. I value privacy. I value segmentation of the wallet structure. I understand that Bitcoin doesn't use an account model. It uses the UTXO model. And I personally find it hard to believe that anybody that has significant amounts of Bitcoin is going to keep it all in one UTXO, going to keep it all in one wallet address, going to keep it all in one place. So this metric for me is a little bit, the space has developed. The wallets have gotten better. It's gotten easier to segment your wallet. Like I have one seed phrase that I use with a hardware wallet, and every single time I receive Bitcoin, every single time, it's a new address. You have new addresses for every single transaction. So, you know, in each one of those addresses, I don't have a single address that holds even one Bitcoin. I don't have a single address that holds a Bitcoin. But the accumulation of all of the individual UTXOs adds up to a larger sum.
Right.
So I'm not too sure if this is a very valid metric, but we are seeing an increase when we are at 10 Bitcoin. We're seeing a very large increase when we go to 1 Bitcoin, and then you get to 0.1 Bitcoin, which in my opinion is a very appropriate UTXO, and it's just up only. So there is accumulation taking place. It could be coming from the retail side. It's hard to say. The whales are more savvy. The whales are dealing with different amounts, and they might be segmenting their wallets into different UTXOs. So a little bit of, you know, are the whales buying?
Okay. So how about we look at a couple of charts on various time frames? Maybe give us your thoughts, sort of short, medium, and long term.
Yeah, so short term, it's basically a coin flip. And I don't usually like to say that, you know, I usually have a little bit more of a bias, but it's an ugly consolidation that we're in. It's really ugly. But the thing to consider is we're in an uptrend. Okay. We're in an uptrend after an accumulation. This accumulation took so far has been about 278 days of just trading sideways. That's a really good accumulation. And we've been in this local consolidation for about 18 days. So there's plenty to point to in terms of accumulation in this local range. But if you go down to the smaller time frames, this consolidation is ugly. It's very, very choppy. And I think this is kind of the, people get lost in the TA. They get lost in the patterns. They get lost in the, oh, this pattern does this and this pattern looks like that. And we have X amount of percentage that this breaks out and X amount of percentage that that breaks out. And what I always need to remind myself is these candles represent human emotion. They represent people buying and selling. And I think that the market is still kind of confused. And we're also confused under a very significant resistance. If I go back over to the daily chart here, we have a very significant resistance right here at around 30K. And that's exactly where we're bumped up against right now. This is from the last kind of major consolidation point at right just under 30K. But I'm going to break things down as I'm seeing it. And I am a trend is your friend style trader. If we are in an uptrend, my target is infinity. If we are in a downtrend, my target is 0. It's very simple. This is how I trade. This is how I make my money. This is how I capture that value in the middle. And when I look at this, we have a flagpole and a consolidation. So at its most basic form, we're looking at a bull flag. It can break down. Like I said, the consolidation is ugly. It shows characteristics of rejection. We're underneath the resistance. So it can break down, and I would expect maybe a breakdown to probably the $25,000 level if it was to break down. But I'm bullish, and I'm leaning towards this bull flag actually breaking out to the upside and testing higher levels at around $30,000 to $34,000 to $35,000 before we kind of slow down here in momentum. That's just my short-term analysis. I've been in this long since about 18,000, and I have nothing telling me to pull the plug on that long just yet. So it's looking good for me as far as my trade is concerned. New entries, you got to be cautious. If you've been DCAing, I don't see a reason to stop DCAing at this point. But yeah, let's take a look at the weekly chart, because the higher time frames are really what's getting me quite bullish. Let me just delete some of these tags here. We don't need that. And I'm going to turn off our custom indicator alphanumerics. Now, alphanumerics has been really good at calling momentum. So we have a lot of similarities to what we're seeing here after this bear market pull down. I'll go through what we're seeing today, and then I'll compare it to 2017. So we had our market cycle top. We had a relentless bear market. We lost a lot of value very, very quickly. There was not a lot of consolidation that happened on the way down. It was just down only, up only to down only. And now we've been inside of this accumulation. Now, alphanumerics has this wave. So we have a green wave to a red wave to a green wave to a red wave to a green wave. And it's been pretty good at calling market tops. It called the market top here, called the market bottom here, called the market top here, and it gave us a fake out here. The fake out is the important thing that I want us to focus on right now. And I will say that the wave is currently green, which is why Matt and I have been long since 18K. We've been pretty bullish on Bitcoin, and a lot of the market does not share our sentiment. But let's go ahead and take a look at the comparison to 2017, and we can see the similarities here. So relentless downtrend after the wave turned red right here, calling the market cycle top. We got a green wave fake out here up to the 50, green wave fake out here up to the 50. Then we came down to a green diamond in the red wave, came down to a green diamond in the red wave, consolidated until the wave turned green, consolidated until the wave turned green. And then I don't know if you can see this, oops. But there is this phantom candle. I can't, this is something that Matt added recently. I forget the metric that's used to calculate this phantom candle, but it pops up and just shows you the big move is coming. And we have this purple phantom candle that has shown up here. I don't know if you can see that. Let me zoom in. And that happened right after the wave turned green. If we go to present day, we had our consolidation, the wave turned green, and we have our phantom candle right here. So there is a ton of similarities. So what does this lead me to believe? This leads me to believe that we have very similar market structure that would indicate that we have the ability to do a bear market rally. Bear market rallies can still piss off the market. There's a lot of, and from a sentiment point of view, I also feel a lot of similarities to what this market condition was like in 2018. It was a whole market fueled with disbelief. Okay, we're at resistance. We're going to correct. Doesn't correct, breaks out. Holy shit. Okay, now I'm in. And then disbelief, doesn't correct. And it was just constant bears saying, no, we're at resistance. No, we're at resistance. And it rallied 300%. So I wouldn't be surprised to see a similar market condition take place where we are right now. So, if we hit 300% from the bottom, what would that look like? We'd be looking at, and it doesn't have to be 300%, past performance doesn't indicate future results, but we'd be looking at another tag of the all-time high. So, I'm not trying to get too bullish here, and I want to make it very clear that we're following a strategy. We have exit plans in place. We have parameters that we're watching that are going to tell us when to exit the trade. But if those signals don't hit, if we continue the bullish momentum, if we continue a bullish trend and continue to mirror what we saw in 2018, I would not be surprised to see us give that third tag of an all-time high before we really experience some serious resistance. So I'm bullish.
Very good. And just to clarify, people, my name's not Matt, it's Sean, for those of you joining us for the first time. But Baloo does a lot of work with a very good trader by the name of Matt. They've been working on alpha numerics together for a while. So link below to go and check out what those guys are doing there. The other thing that I would say is we're also going to be demonstrating some algo trading bots that I've been using for about a month. So over the coming months, what we want to do is show both our communities, how these things are performing, and put the various options in front of you, because would you agree we're kind of in Would you describe it as a trader's paradise? What we've been seeing this year? I mean, there has been quite a bit of volatility. What word would you use to describe this
I
market?
would say, I would say for a trader that has a dialed in strategy, that they can really remain emotionless, which, any good strategy gives you that ability. You're laughing. You're laughing at the market right now. You're having a good time, enjoying everybody trying to figure out what the fuck is going on. There's a lot of confusion out there. There are very fundamentally bearish things that we could be pointing to. There are big, financial collapse things that we could be talking about. But we keep rallying. So if you're a retail trader that gets your signals based off news, you're having a very bad time. You're having a very bad time because nothing's making sense. But the market can remain irrational longer than you can be solvent. It's important to realize that there are people out there that get it. And just because you don't get it, and just because the media doesn't get it, and just because the social media viral things that are taking over Twitter and YouTube and whatever doesn't align with the price action, doesn't mean that the price action is false. The chart is truth, okay? The chart is showing me that there is a lack of liquidity, there is a increase in demand, and we are seeing that in the price. It's really that simple. I don't care what the narrative is. I don't care what the fundamentals of the geopolitical climate are. The realities are the candles are green.
Yeah.
And it's looking good.
Yeah, I mean, look, an interesting development today. Bloomberg, I believe, have announced that they're launching an AI that, should it work, would effectively mean that most financial analysts are somewhat redundant. Then I read right underneath that Italy's actually coming and put a halt to Chat GPT. I mean, there's just so many different things happening in the world at the moment. We've kicked the can down the road, from what I can tell, for another year, with another 300 billion coming into the market. Is it billion or trillion that we've just printed effectively?
Billion.
Bit of a difference.
But because of fractional reserve banking, $1 billion can turn into $1 trillion worth of debt.
Yeah.
It's a lot of money.
Yeah.
And it's not stopping. It's only going to get more. We have printed more money in the short term than we did during the financial crisis of 2008. It's not slowing down. They're just getting sneaky. They're making people poor. They're making people reliant upon the government, so that when the handouts come, they're welcomed with open arms. They're going to one day come out and say, hey, there's $2,500 waiting for you.
Yeah.
We care about Americans. We care about you being able to afford gas and groceries and this and that. And they're just going to keep printing.
Yeah.
And that printing is theft from everybody. The only people that get any benefit from that are the ones that are sticking their fat mouths right on the faucet, because the only people that benefit from this. And it's criminal, disgustingly criminal.
I mean, look, we're obviously going to be touching on multiple subjects on that topic moving forward. There's a whole heap to unpack. We don't want to come in too hot and heavy today on this first episode back.
Let's get a YouTube ban right off the bat. See you guys on Rumble.
But look, just in summary, what I would say on that front is we are in a period where it's very difficult to understand for the layman. But the basics here are owning hard assets. If you're lucky enough to own a house, well done. If or if you're paying off a very long-term mortgage, probably okay. Outside of that, you need to own some hard assets. Bitcoin is one of those. It's hard money. It's got a limited supply. When I got into the space, the real use case, wrote many articles, made many videos on this. I didn't really see a massive use case for somebody in the West. It was more sort of, your Argentinian farmer trying to escape capital controls and hyperinflation, etc. Here we are. We're all in that same situation now. How bizarre is that? But as I say, the can has been kicked down the road probably for approximately a year. What that's likely to mean is that a lot of these sort of small, medium-sized banks are swallowed up by bigger players. Canada, for example, the UK, there's a handful of banks, big ones, sort of 6, 7, I think. The US has still got about 4,000 banks. So the likelihood is that that number will reduce greatly. I don't see hyperinflation. I don't see massive run on banks in the next year. So we have some time, and that means for you, the viewer, it means you've got time to really understand this asset and what it can do for you. I don't think it's all doom and gloom immediately, but it is time to really, really understand what the real value of Bitcoin is. And we're going to go to great pains to rehash that again for you. We're going to show you the exchanges that we're using. Look, we've got CZ rumors today that Interpol, there may be an arrest warrant for him. That is just a rumor. I want to reiterate that. But look, there's still things that can go horribly wrong within the crypto space. But I think, let's stop worrying about that. Let's understand the real value of Bitcoin and what that does for you. That just removes you from all the noise. If you want to play the shitcoin game moving forward, brilliant. More power to you. We'll likely do that as well in a bull run. But for now, it's all about understanding Bitcoin. Isn't that right, Baloo?
Talking to a maxi these days. Everything's shit. And I will say, because a lot of my audience, when I flipped bearish, they were quite surprised, and they started to hear my Bitcoin narrative, because I didn't have the Bitcoin narrative. Yep. Because we were in a bull market. Now, if you want real performance in altcoins, like the stuff that sucks a lot of people in, it happens beyond an all-time high break in Bitcoin. It's a very short period of time that sucks in the most amount of people. So a lot of people were quite surprised when I started talking shit about, well, Ethereum and a lot of other coins, and saying, oh, you never used to be a Bitcoin maximalist. I always was a Bitcoin maximalist. Bitcoin is the money to me. I was in this market to make money. My version of money is Bitcoin. So while we were talking about other assets, while we were talking about shit coins, while we were talking about this coin, that coin, that was the focus of the conversation. But when it came time to retreat, you retreat to the store of value, and that's Bitcoin, for me at least.
Oh, look, I've been hanging around with some hardcore shitcoiners for the last month, and it's quite surprising to see a change of narrative from a lot of those guys as well. So look, back to the Bitcoin roots to a large degree here, and there's so much to unpack. There's so much happening in that space now, not just from a macroeconomic point of view, but also developments on the network. We won't get into that today, but there is a hell of a lot to unpack.
Pretty soon, we're going to have shitcoins on the Bitcoin network. You guys are going to love it.
Okay, well, look, this was just a short show today to reintroduce ourselves. There's links to Baloo's channel. Please make sure you subscribe over there and check that out. We'll be back next Tuesday. We are going to ramp up a lot of other content as well. We've got some interviews with some great people coming up. Plus, we're also going to make some permanent content that really talks you through the process of buying Bitcoin, storing it, etc. But that's also something we'll be touching on, on the regular on these shows. If there's anything else that you think would be valuable to you people, we're here to help. So please let us know in the comments. Baloo, just before we finish off, the title of the show is The Real Value of Bitcoin. Do you want to maybe just sort of summarize your thoughts on that to close the show out?
Yeah, the real value for Bitcoin for me is the fact that every government on the face of the earth is stealing everybody's money, except Bitcoin.
On that note, we'll see you next week, people. Bye now. Stay safe.